governors of central banks from 12 West African countries, including the governor of the Central Bank of Nigeria, are meeting in Monrovia, Liberia, to advance technical and institutional preparations for the launch of the long-awaited eco-regional currency in 2027. Nigeria's presidency disclosed this in a statement released on Saturday, where the three-day session convened under the framework of the Economic Community of West African States is focused on finalizing critical policy alignments and governance structures required to drive the single currency project. Now, total capital importation into Nigeria surged to $6.01 billion in the third quarter of 2025, representing a 380.16% increase compared to $1.25 billion recorded in the same period of 2024. The figure also reflects a 17.46% rise from $5.12 billion recorded in the second quarter of 2025, indicating sustained investor interest in the Nigerian economy during the period. Now, joining me to discuss this in a lot more detail is Arise Business Analyst Chika Mbonu. Good morning to you, Mr. Chika.
Morning, Abby. Welcome to a new week.
Yes, a new week, new developments.
Yes.
Let's begin with Nigeria's capital importation surging to $6.01 billion, Q3 2025, that is. What are the key drivers here?
Okay, I mean, before I push into the figures for the quarter, let me just help to enlighten some of our viewers. Yeah. We'll spend a lot of time. We'll focus on our viewers a lot to just make sure that they flow with us. The total amount of foreign money that comes into Nigeria over a particular period for investment is what represents capital importation. The amount of foreign money that comes into the country, for investment is different from things like a company in Nigeria having export proceeds, bringing it back. It's different from our brothers and sisters abroad who send in diaspora remittances down here. It's different from our earnings in oil. It's different from foreign aid. These are specifically for investments. Now, there are three levels of this capital importation investment. The first one is what they call the foreign direct investments, sometimes called FDIs. Basically, this represents money that's brought into Nigeria for long-term investments. Investment in companies, factories, setting up a refinery, buying real estate, things that are physical, those are foreign direct investment. Then you have the foreign portfolio investments. Basically, those are money that come into the country from abroad still, but focus more now on investing in shares, things like shares, treasury bills, bonds that are chasing very good returns in Nigeria. That sometimes the FDI is short form for foreign portfolio investment are called hot money, because they call it hot because they chase, and the last group is what they call other investments. For example, when banks get loans from other banks abroad, like placements and trade finance things and whatever, and they come into Nigeria, those are other investments. So those are three classes. Now, in the respect of the report that you pushed in now, what we have is that salutary in Q3 2025, a growth of 380% compared to 2024 Q1. Yeah. And then also quarter on quarter between Q2 and Q3, we had also 5.12 billion. Now, what the issue then is, Abby, is that about more than 80% of this came through foreign portfolio investments. Now, I do recall that I call this hot money, in the sense that it's chasing returns, quick returns. And what happens to foreign portfolio investment is that they are subject to the vagaries of interest rate and exchange rate, political issues in the country. Every small uncertainty, they might actually fly back to safety where they came from, and that's that. But does a country need the foreign portfolio investment? Do we need foreign direct investment? You have to pick the two he would rather say, let's give us more foreign direct investment. Because this report actually showed that the foreign direct investment, which has more impact in employment in the country, taxes and all so on and so forth, it was very minute in this report. Now, but the issue, therefore, is do we say we don't need foreign portfolio investment that we know is hot money? No. We need it still, because even remember, in our country at the time, we didn't even have the foreign portfolio investment. They are subject to the challenges in the country, because remember, when the money comes in to buy shares, invest in bonds or stocks and other things, after the expiration of the investment, they want to be repatriated back. In those tough days in Nigeria, when FS was a problem, it was always difficult. So we had a massive portfolio of investments that had not been returned to the owners abroad, and it caused a lot of problems. Now, so if I want to push it a little more, Abby, I would just say something like foreign direct investment. It's like somebody coming to my family to get to marry, and he builds houses inside my family. He's rooted. Unlike foreign portfolio investment that come and they check into a hotel. So the person that is foreign direct investment is rooted in the country, where the foreign portfolio investment can check out at any time. Yet it's still very important. It's only when you have satisfied your hunger, Abby, that you remember that there's no meat in the soup. But we, while we commend the reports, the impacts and the growth, we are pleading more, we are pushing more for foreign direct investments, because those have more impact in the economy of Nigeria.
Right,
but are very jealous.
Yeah.
They're very jealous, Abby, because they chase certainty. They chase where there's security. They chase peace of mind and so on and so forth. And those are things that Nigeria have to work on.
Absolutely, and prioritize as well. And I'm so glad that you were able to lay the backdrop so we get a much clearer picture of where really the excitement is and where expectation is. Let's look next at the CBN and others finalizing, others being 11 other central banks across West Africa, that is.
Just again for
currency.
A lot of our viewers, because a lot of people have asked me a question about what is thing. And it's like the West African countries are trying to create one money.
Yeah.
One money. One common money for the whole region. So just like the euro, Europe uses euro. You know how many countries in Europe now. And so instead of Nigeria using Naira, Ghana using Cedis, Sierra Leone using their Leone, or Gambia using their Dalasi, the currency for use now is ECO. That's the currency that everybody's angling for. That's the single currency. The plan for launch is 2027, but we've had it before, Abby. This launch has been moved several times, but not surprisingly, because of the issues that are driving the process. But let me talk about the pluses. I mean, if you have one currency in the whole West African region, it means that you don't need to have cities now to buy things from Ghana. You will have that. Once you have ECO, you can buy anything from any of the West African countries, the 12 that are signing to that. And you're not subject to foreign exchange losses again, because it's the same currency that, and your market is going to be bigger, because we have the same currency, you can work in the same market. Of course, there's more regional unity. But you see, the issue there is, will this thing work? Will it happen? Because there are a lot of challenges that are there. Because our economies are not the same thing. The economies are not the same thing. The economy of Ghana is not the same thing as Nigeria. The economy of Gambia is not the same thing as that. And so one currency may not fit everybody. So those are kind of issues they have to address. Of course, the strength of the economies for each country is sometimes. Inflation is a problem for some of these countries also. So that becomes a problem. So the challenges in governance, macroeconomic challenges, if we have one economy now, Nigeria Central Bank may not be able to manage its own economy. Now, Central Bank Nigeria will be able to manage specifically Nigerian economy. Will be subject to the vagaries, the issues that happen in other countries. You can be pulled down, like one person falls down, everybody falls down. And those are the issues that happen. And we're hoping that the Central Bank governors have met again to look at the challenges that have led to the several postponements of this commencement. And we hope that this 2027 hopefully.
This is what I'm about to ask you, because given all these challenges, we're looking at a broader integration architecture, which of course is no small feat either, like you just mentioned, but is 2027 indeed a feasible timeline, a realistic timeline?
I mean, the worksheet is plenty. It's long. What they're going to tick off are many. Let's hope, but it's over optimistic to happen in 2027. No matter about that, there's a disparity in the economies of these countries. Some of them are running deficits, some are running high inflation, and so on and so forth. Monetary policy in each of the countries has to be stable for the measure to take place, and it's going to be difficult to achieving that.
Right. So ultimately, we see the appeal and the merits of having the eco currency, which in many ways mirrors the European Union model. So. Like you said, let's wait and see. Let's see what happens. I want to thank you so much, Arise Business Analyst Chika Mbonu, as always, for joining us. I will see you again tomorrow, hopefully.